Well, good afternoon. Happy Friday, July the 23rd. Mark Milam here with Highland Mortgage coming to you with this week's interest rate summary and market update. Wow, we are in some crazy good territory for where we thought we would be going into the latter half of July. We kind of anticipated as the year wore on in 2021 that interest rates would be on this slow upward trajectory. That made perfect sense, right? We were going to exit the pandemic, albeit slowly. The economy was going to start to pick up. Inflation would become a concern and up would go interest rates. That is not what's happening. As we go into the latter half of July, we are headed back down to some of the lowest levels we've seen in the past 6 months. Matter of fact, take a look at this headline here. Mortgage rates in best territory since February, and really two primary reasons for that. Number one is the announcement last week, at the very end of last week, after rates had published the removal of the adverse market fee, something that was put into place during the Trump administration days, where refinances were actually penalized versus purchase transactions. There was this extra 50 basis points fee on refinances. It was put into place last year during the pandemic. It was meant to offset potential losses that would result from the pandemic. Whether those losses actually occurred or whether they didn't, the fee was in place until late last week. Now having that fee removed puts refinances on the same level playing field with purchases, which is great news. We're literally talking about an eighth of a point better in interest rate overnight without any market movement at all. So that's all fantastic news for conforming conventional loans. Now, what else is going on is the fact that the pandemic hardly seems under control, at least in unvaccinated areas or large unvaccinated populations, and it's particularly centered around the Delta variant. Unless you've been under a rock, you've heard about this, you've read about this, you know what's going on here. The actual infection rate is starting to rise in some communities. That is definitely not the news we want to hear going into the fall when the temperatures start to cool off and infections can tend to spread more easily because everyone's closed up indoors. So we're going to have to keep a close watch on that. And obviously what's happening overseas, because we're also interconnected, plays a part in this too. So lots of factors coming into play that's actually putting pressure on rates back down lower. And we're starting to see some levels that we really just did not think we would ever see again. Let's take a quick look at mortgage-backed securities, what's happening in that market. Here's mortgage-backed securities, the instrument upon which fixed rates are based. And you can see the past 5 days, we've just been hovering right around this layer of resistance here, which is a great place to be. If we zoom out a bit and look at our 6-month look back, you can see this is good territory to be in. This is the territory we like a lot. Unless we were back in the heady days here of January and then in 2020, these are some of the best levels that we've seen all year long. Now take a look at what's coming up next week. If we take a look at the economic calendar, I'll scroll all the way down here to next week, starting on the 26th, pretty light week, and then we get here to Wednesday, where the Fed is going to make their policy statement announcement, 2 p.m. Eastern time on Wednesday. We don't think the Fed's doing anything with the Fed funds rate. No one does. But what we'll pay close attention to is the Fed's language about tapering. Are they going to continue buying treasuries and mortgage-backed securities upwards of $120 billion per month? Are they going to keep doing that? Or are they going to start to scale back on those purchases? Because the Fed demand is really what's also helping drive interest rates low. And if the Fed starts to reduce that demand in the marketplace, we could see that put upward pressure on rates. The Fed language is going to be everything next week, not necessarily the policy statement, but what the Fed says in terms of the language. And then take a look here as we get into the latter half of the week. Boy, just a lot of market movers in terms of things that might influence mortgage rates. That being said, if you haven't taken advantage of really low rates and accomplished your refinance, if somehow 2020 got by you, maybe you lost your job, you couldn't avail yourself of the good rates we had in 2020, but now you're back working, boy, now's the time. Strike while the iron's hot. Get yourself in on these low interest rates before we get into Wednesday and then the latter half of next week. If I can be of any service to you, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend.